Thursday, October 26, 2023, Maneko 64, home of alternative economics and contrarian views. So we're going to look at Japan today, and specifically the Japanese yen. The dollar is making new highs, recent highs above 150 versus the yen. I've spoken many times about the Japanese yen carry trade. And yes, a weak yen is good for the carry trade. But now with Japanese bonds also dropping, it's a problem. And it's going to be, in my opinion, the domino that leads to more and more troubles in the US Treasury market. So that's what we're going to focus on today. Before I start, I just wanted to say that in these turbulent times, it's more important than ever to keep your eye on the ball. And what do I mean by that? Well, I mean not to be distracted by all the geopolitical events, not to be distracted by the mainstream media, and to focus on what really will make or break your financial future. That's my opinion, not just yours, but your family's. And that's why I focus on the financial aspect of things. And I think, yes, they're going to continue to inflate the system. And that's why I'm holding on to my physical gold and silver. It's more than just making a profit. It's about being self-reliant and protecting your assets outside the system. And also in these dangerous times, I would say, where law and order are breaking down, I think it's more important than ever that we do everything to try to safeguard our valuables. And I've recently partnered with the Dirty Man Safe. Check it out. Details for it are below in the description. And I have a promo code Maneko10. You get 10% off if you buy a Dirty Man Safe. So, yeah, Japan is really the pioneer of currency destruction. And why? Well, because Japan had its everything bubble in the 80s, and it burst in the late 80s or 1989, early 1990. And I remember it well. I had just started working in the financial sector. And in Switzerland, the small private bank I worked for, a lot of our clients had what was called at the time the Nikkei put warrants. There were puts on the Nikkei. So they did quite well on those, and they started buying it when the Nikkei was approaching 40,000. I don't think he ever made to 40,000, but they were really popular instruments. But one thing that Japan, their financial and government authorities or central bank and their treasury or Ministry of Finance didn't do was allow banks, companies, everything to collapse, to liquidate. They kept everything going. The term zombie banks comes from Japan in the mid-90s, I would say. They kept their banks alive, and they were the pioneers of money printing. And we are told that Japan has had deflation. Yes, in terms of the economy, as the economy has been moribund, but the currency has been trashed. Today, as I speak, the price of gold is approaching 300,000 yen. Back in 2008, during the Great Financial Crisis, it was at 60,000. So, yes, gold will not just protect you versus hyperinflation, but also deflation. What's bad for gold is when we have stability in the monetary financial system, and we have anything but Stability means rates around 5%, short-term rates, longer-term rates around 6 or 7, and we haven't had that in many, many years. Yes, of course, right now they're coming up, and some people don't understand why 5% rates are such a problem. Well, they're a problem because they've come from almost zero in less than 2 years. That's why they're a problem, because the debt that was created out of the artificial low rates becomes a problem, and is becoming a problem for Japan. Japan, of course, up until recently, didn't mind the yen getting trashed because it encouraged people to sell the yen even further to help exports, and but now it's getting out of hand. The other thing that the BOJ has lost control of is basically the bond market. Up until recently, up until a year ago, the 10-year yield was being kept between 0 and 10 basis points. Right now, we're almost approaching 1%. So the problem they have now is that the lower the yen goes, or the higher the dollar goes, the more treasuries they need to sell. So when they sell US Treasuries, Japanese have a lot of dollar reserves. When they sell treasuries and they cash in the dollars, they take those dollars to sell the dollar and buy the yen to protect the currency from dropping even further. And it's serious because the whole Western financial system has gotten a lot of liquidity from Japan. But if they're trying to protect their currency, that liquidity is going to be drained off. And we're seeing the Federal Reserve drain off the liquidity through QT, through higher rates. And that's a huge problem. And is it any wonder that right now we're retesting 5% on the US 10-year yield? So let's have a look at the Japanese yen. So here we are this morning, and it's 8:15 a.m. London time, and the dollar's broken above 150. And yes, it's a little complicated. This is the dollar going up, which means the yen goes down. So back in October of last year, the high was 151, I think, 94, so just below 152. So we're fast approaching this high from last year. And up until recently, in the last 2 weeks or so, the Bank of Japan has been able to keep the yen from dropping below, or keep the dollar from going above 150. But last night, London time, it broke through that level, and right now we're at 150.50. And if we break 152, that would be the highest level since 1990, which is basically when the Japanese everything bubble was starting to burst. And looking at this chart of the dollar yen, it looks very similar to the US 10-year yield chart. So I think I see a lot of trouble ahead, especially if the yen breaks through or the dollar breaks through 152. I could see us very quickly at 160. I could see the US 10-year yield at 5.25, maybe even 5.5 before the end of the year. Yes, Mr. Ackman might have made, I think, a couple of $100 million profit from his short in the long bond, but I think it could have been premature. I think he might jump back in and go short again. So that's how I see it. How is that going to impact things? Well, we know that rising yields, and this is a bad kind of rising yields because I think the Fed has lost control, and eventually they're going to have to find an excuse to stop the quantitative tightening. There's talk already of that they might do yield curve control, or the other strategy is of stop selling the longer end and just sell the shorter end, some kind of manipulation. And once they start doing that, the market will smell pivot. And yes. The other thing is higher yields, because US Treasury yields are supposed to be risk-free rate of return, and investors discount stock prices off those yields. And the higher the yields go, and the quicker, the faster they go up, the more instability they create in the system. And that's not even to talk about all the derivatives out there, interest rate derivatives, which make up about 2/3 of all derivatives. And we don't even know the notional amount of derivatives out there, because a lot of them, or most of them, are over the counter. But there's speculation that it's over 1,000 trillion or a quadrillion. So yes, the volatility and also the problem with liquidity in the bond market that we've had since 2015 is a real problem for the powers that be. And I think it's going to make the system, stock, bonds, everything more and more unhinged and more unstable. We're also starting to see the major banks do quite badly. I saw that Rafi spoke yesterday how Citi, Morgan Stanley, Goldman Sachs, and Bank of America, their stock prices are looking really bad. And one of the reasons for that is that a lot of homeowners in the U.S., they've been lucky because they've been able to fix their mortgage rates at low rates for 30 years. But the people who issue the mortgages, i.e. the banks, they're in trouble because they're getting very low income for what they could get now. So, for example, if a bank issued a mortgage at 3.5–4% 30-year, now it's approaching 8%. They're giving up a lot. So that's the problem there for the banks. Eventually, also, we're going to see consumers get hurt. And that's why in the U.S., existing home sales is dropping so much, because do you really want to move and get a new mortgage at a much higher rate? No. So the real estate market is going to kind of freeze in the US. Here in the UK, it's a bit different because a lot of the rates are fixed for 2 or 5 years, and that hurts more the homeowner. So yes, there's a couple of things we need to really keep an eye on, and I've been saying this for the last few months. One of them is the bond market. Keep an eye on the 10-year yield. And the next one now also is the Japanese government bond market. Keep an eye on their 10-year yield. And you can do that through investing.com. As I've told you before, you go there and you click on markets and you click on bonds and you go onto world government bonds and you choose the country you want to follow. So as I speak right now, not surprisingly, the 10-year yield is approaching 5% again. We're just around 4.99. That has been the high. A few days ago, it went up to 5.02. I think it's going to retest that. The Japanese 10-year yield, I said a few months ago when they readjusted their yield curve control for higher yields, I think they readjusted it from 0 to 25, then from 50, then from 75 to 1. And I said, well, by the end of the year, we'll be at 1. And lo and behold, right now we're at 0.88, and the high's been 0.89. It's up 2.5 basis points. And you might say, well, that doesn't make much difference, but it does. It does. It's just the, how can I say, it's a signal that things could get a lot worse. And I also expect maybe the Bank of Japan to increase its QE to try to control that JGB 10-year yield. So that's going to create even more liquidity. It's a huge mess. So yeah, keep an eye on the bond yields, and also keep an eye on the Japanese yen, or the dollar yen it's called. And the higher that rate goes, the worse it is for the US Treasury market, the worse it is for everything. And don't forget, the U.S. government is still spending like mad. A deficit to GDP in the last financial year is approaching 7%, which is crazy. But you could argue that we are at war, the West, proxy war, because there's no appetite, public support for the UK or the US going into a war. So what they use is proxies, like in the Ukraine and now in the Middle East. And that justifies all the fiscal spending. And I would argue that's the only reason why we're not in a recession right now, is because they've started these proxy wars. Hopefully they won't become direct wars for the UK and the US, but it's possible. And the other thing I would look at is the price of gold in yen. As you can see here, we're fast approaching 300,000. And I think that's going to be, that's going to be the same for all other currencies. And they're going to use the excuse of demographics. That's why the Japanese economy hasn't done well. That's why the Western economies haven't done well. But can you imagine if the Japanese saver, Mrs. Watanabe, the Japanese pensioners, could invest their money at 5 or 6% in yen? Things would be a lot better. When you distort the rate of interest, you keep it at zero, you destroy capital, you destroy savings. Maybe that's why the Japanese economy hasn't been doing well. So anyway, let's quickly look at where the markets are this morning. It's 8:22 a.m. London time. We've got spot gold at 1986. It's up $7. The high's been 1989, just below 1990. The low's been 1978. For my UK viewers, just to let you know, we're at 1644, the price of gold in pounds. I think the high early this year was 1648. That's an intraday high. So as I said, all currencies are going to follow the yen lower. And by lower, I mean the purchasing power of the currencies are going to drop. The purchasing power of gold is going to continue to rise. Silver is trading at $22.94, up 9 cents. High's been $23.05. Low has been 78. The Dow futures down 95. NASDAQ is down 1.3% or 185 points. The S&P is down 30 points or 0.75%. So you can see that the rising yields in Japan, the crashing yen is having its impact on risk assets, as it's called. To the currencies, the pound is down 0.2% at 120.88. The euro as well is down 0.2 at 105.43. The dollar is up a 0.25% at 150.58 versus the yen. The high overnight has been 150.78. And one thing I say about the yen, you might see the dollar drop sharply during the day, and that will probably be an intervention by the Bank of Japan, which means they've sold some treasuries, they've cashed in some dollars, and then they intervene to try to keep the yen from dropping too sharply. Dollar's down slightly versus the yuan at 732.60. To the other currencies, Aussie dollar is down a quarter at 62.94. The dollar is up 0.15 versus the Canadian dollar at 138.15. Excuse me. And the Kiwi dollar is down about 0.2, just below 58. To the commodities, WTI crude is down 0.5%, 84.88. Brent is down 0.5% at 88.88. Platinum is down $4, trading around 903. And high-grade copper is down 0.2 at 360.70. So with that, I'm going to wish you all a very good day. Take care. Bye.